Welcome to StockMarketPundit.com. It's a Saturday. It's a wonderful Saturday. We've been here about 5.5 hours already. It's on a Saturday. Why are we here? Because we are putting in the work that we need to put into ourselves to understand where the market's going to go and then how to profit. And it takes a lot of analysis and a lot of work, and it takes time and energy to get paid the kind of money that you want to get paid with the kind of accuracy that we get here at StockMarketPundit.com. And that's why we're here as a trading group on a Saturday. This is the weekly Nasdaq Comp. The weekly Nasdaq Comp has done quite well. And this is V-shaped pattern number 1, right there, with a reversal bar. The next area of V-shape, you've heard about V-shape economies. Well, there are V-shaped markets. There are different stages. That's number 1. Number 2 would be here. Number 3 would be up there. Right now, we're at the full area of where the market's tanked from 5/4/2008 to the swing low. This is a mathematical range down, a mathematical range up. And I am going to show our traders why we are in a pullback phase. Now, the Nasdaq Comp has fared better than all other indexes. Part because of technology and retail is in there and a lot of things that, the economic indicators and stimulants have worked. That's how you get these big moves. This was the low that we called here on 131 at the bottom of the January reversal. I said we weren't going lower. We had the up bar and we've never looked back. What I am going to say is the prior week, called the inside week, and it applies on daily, weekly, monthly, 3-minute chart, 15, 60, it don't matter. Here is the weekly prior week high, which was 2530.15. The week low of last week was 2451.72. Notice that this week low is lower by, wait a second, this low here was 51.72 and this low was 24.56. It didn't break that low. This low was 24.51. But this low here is right about didn't break that little wick there. It was only 4 points difference. But I can tell you that the top up to top down is much greater than that last week. You can see it. It's very clear right here. And here, let's just blow up this part of the chart and you can see what I'm talking about. You didn't break below the wick, but the down week is much greater. So we went down big one day, we came back up, and then we went back down on Friday. Now, watch this. Pro Trader Bar, weekly. If I'm closing below here, if I come up like this, and this acts as resistance, that's this move, from here to there, half of that bar, and I don't close or get a closing price above there in a consolidation, that means that this trend is weak and I'm going to go back down this way, back over here. That's 2440. The point of it is that we were totally overbought at 94.29, and we're working that overbought level. The whole market's overbought, and overbought markets have to have corrections and pullbacks before they can set up and make higher highs. And basically we are trading the pullback. That's what we're doing. I'm not saying that it's doom and gloom yet. I'm saying that markets put in tops, and we put a 52-week high in with a reversal. Here's the January short that we did over here. It's on our website. Go to StockMarketPundit.com. Find it in the trading videos. Go back and look at the 10-year history that we did for you. You pull back and you made a greater higher high. And we've walked the market up, and we got overbought right here on this indicator. And that percent DS is at 94, and this is lower. If this goes lower, you can see what happens when you go lower on these readings mathematically. We have a mathematical formula that we developed with all of these indicators, and you go down. It's when they stop, they peak, and they start the uptick, and they keep going up the ladder. That's how you get the big moves. Well, now, here we are. We're going down below it. If it continues to weaken and it continues to go down, that means that any bounce is going to be very weak, and you would short the high end of the market. The broader equities that trade in the Nasdaq and Nasdaq 100 would be the same. And we do have a reversal going. If we cross over, if this 90.52 crosses over the slow percent DA, that means that we're going lower. We peaked here at 131 on the weekly CCI, and we're going lower. Okay, the weekly moving average is going lower. It peaked right here at 7.1, it's 3.7, and it's 1.0. That's why the top is weak. You can't go higher and these going lower, because we teach people in the school, not only do we have our mathematical formulas in equities, we have mathematical formulas also on indicators. And it's very important for the trader to know that when they bounce, to sell short, because the trend is weak. Nothing goes straight down. You come down, you bounce, and we're overbought, not nearly as what we were here. But this closing week right here is the beginning of working off the overbought market. All the sectors are overbought. All indexes are overbought. Here, monthly chart. They got a monthly buy signal here, believe it or not. That's very darn bullish. But in the short term, what are we? We're overbought on a monthly chart. Yes, let me show you like I showed you on other ones. Here are sell signals. These are monthly buy signals. This was a big sell signal on the Nasdaq. We got a buy signal. That's darn bullish. But the problem is, within this buy signal that they got on a monthly, which is bullish, is that in the short term, we're overbought. We are. And overbought markets have to have pullbacks. And we're going to be, remember that the Nasdaq comp, and that's this one, and the Nasdaq 100 have performed better. The earnings have been good in tech. The stimuluses, publicly traded companies have leveraged inventories, have done everything right within every recession or depressionary environment, and they've walked it up here. This is the major downtrend in '08. You're right there. What we're going to look at is that, yes, you've got that monthly buy signal. They don't come around very often. Here was the monthly sell signal. We're overbought. That's the monthly chart, and we're overbought on a monthly. If I go back and show you how overbought we were over here in year 2000, it was 94. Right now, and hey, nothing says it can't get there. We're at 90. We could pull back and blow right up here. We could get that extreme. That was very extreme overbought condition here, right here, wherever it was here. 94.8%, and it went down. Bam, that was the bear market tech bubble. Over here, when we were overbought, it was 92% and 2.7 on a monthly on the Nasdaq, and we went straight down. What I'm telling people right now, and we'll conclude the tape, is that we are overbought here as well at 90. We can't go to the extreme, and we could come up to these tops over here, and this reading could go higher. But right now we need to pull back before we make that next high. They got the buy signal on the Nasdaq comp to go up there. And we can't get to those extremes. And those extremes will be major reversals looking forward.